What if I told you that the future of gold market and perhaps your financial future hinges on a secret battle being fought behind the closed doors? A battle between powerful institutions, global markets, and the very fabric of our economic system. Last week, gold made surprising moves, defying expectations and leaving many traders asking what has happened, and more importantly, what's coming next. In this chaotic world, gold isn't just a shiny metal, it's a barometer of fear, a hedge against uncertainty, and a signal of smart money's direction. So today we are pulling back the curtain. You'll see the forces you can see that are shaping the gold and decode past movements and forecast the upcoming week like never before. So hit that like button, subscribe, and let's dive into the heart of the gold market. Because what you don't know can hurt your portfolio, and what you are about to learn might be the key to your next big win. Let's rewind to last week. A fascinating tug of war unfolded between the US dollar and gold. The Chicago PMI came in at 40.4, still contracting. The S&P manufacturing PMI showed slight growth at 52.9, but construction spending fell again. And although ISM manufacturing improved to 49%, it still signaled contraction. On the jobs front, ADP employment dropped by 33K, a red flag, and FP came in at 147K, better than forecast, but still showing slowing momentum. Meanwhile, wage growth cooled to just 0.2% month over month. These weak job figures pressured the US dollar, making gold more attractive to global investors. A softer dollar usually supports gold, and that's exactly what happened. Plus, the trade deficit widened to $71.5 billion. And if we talk about the speeches by Powell and Postic, the market sensed that the Fed might pause or pivot, which is bullish for gold. Now let's look at what's ahead. On Tuesday, 8 July, we get the NFIB, Small Business Sentiment and Consumer Credit. Wednesday, 9 July, brings wholesale inventories and most importantly, the Fed FMC minutes. This could reveal vital clues on inflation and interest rates. Thursday, watch the initial jobless claims and speeches from Fed members Muzalam and Daly. Then on Friday, we'll see the monthly US federal budget. But next week, even more intense CPI, core CPI, PPI, retail sales, housing starts, consumer sentiment. These are big market movers. If inflation cools and jobless claims rise, expect gold to benefit. Gold will be hawkish. If the opposite happens, gold could face resistance. We can see the gold dovish in that case. It was fundamental analysis. Now let's have a look at sentiment analysis. Let's see what the big players are doing. So let's decode the COT report, a weekly peek into the minds of big players. As of June 24, non-commercial traders, hedge funds cut their longs by 4,509 contracts and increased shorts by 1,135. They are still net long, but it shows a cautious tone. Meanwhile, commercial traders, producers, and hedgers increased longs and cut shorts. That's a more bullish posture from those closest to the metal. Open interest declined, meaning fewer new bets are being made. Overall, big speculators are trimming risk while commercial players are stepping in. That's a mixed but insightful signal. Sentiment is cooling but not collapsing. And now let's see what the geopolitical conditions say about the gold move. So, right now, gold is benefiting from global uncertainty. Middle East tensions remain high. On June 22nd, a US airstrike caused a quick gold spike. Then there was a US China trade disputes, always a wild card. Tariffs, sanctions, diplomatic tension drive investors towards safety. And you know very well, like safety means gold. So remember my words that gold is a hedge against inflation and a store of value and a refuge in chaos. So, with conflicts and economic rivalries in play, gold remains in high demand. Technically, gold is taking support at 300 and resistance at 380. So between these two levels, gold is in consolidation phase. If we see a breakout about 380, so it will be likely continuation. We can say gold bullish. But breakdown below 300, we can watch it for deeper correction. So always use price action, support resistance, demand supply trend lines, and combine it with fundamentals for high confidence setups. If we take an overview at the end, you can see jobs data is softening, wages are cooling, and dollar is weakening. So fundamentally, gold is bullish. COT data say cautious optimism, and when the geopolitical conditions, dangers are over there, it's been safe haven demand, and gold is the safe haven demand number one metal. Technicals show consolidation phase near highs, so we can say short term cautiously bullish for gold. So thanks for watching this video. Like it if you found value and subscribe for weekly gold insights and comment your outlook.